Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for this Wednesday, the 27th of January, 2021, and what a day it was. You know, markets out of nowhere can all of a sudden put in corrections. We went into today thinking, okay, the FOMC meeting, but nothing should really come out of that in any manner unless the Fed chair, during his press conference, said something wrong and set the markets off, which he didn't do. This was more about a market that probably got a little bit overdone, maybe more than a little bit overdone, but overdone in one manner or the other. And then the second part of the market was what's been going on with GameStop, and then you have AMC Theaters, costs, Express. I can go on. There's a whole list of them that have been going on because on the social media website, Reddit, you're getting people that are grouping together, looking for the next stock they can attack with a heavy short open interest. That seems to be what is going on. People have to learn, like you, that the short open interest in a stock can exceed the amount of stock that is issued. It has to do with keeping the markets normally stable, borrowing of stocks, how it's done. It's a profit center for many of the brokerage companies, but also very risky when an event like this happens, which is not common. Will this be the new norm? I don't think anyone knows. I think that these Robin Hood type traders that have come out of the woodwork with these free commissions in stocks, they're a different breed. They're proving the pros that are fundamental traders. They're giving them a very difficult time. But at the end of the day, will the fundamentals come to rule, or is it money that's going to rule? Right now, the money is ruling the day. I care less about the fundamentals, especially if your money's at risk. Now, if you're in the market and you were long these, you're doing fine. But if you were short in any manner in the market and not covered on that short, very expensive lesson. If you tried to trade those stocks today, you saw that a number of the firms have blocked you from trading them. That's their method of protecting, not you so much. I know they'll tell you that. It's a matter of protecting their capital. They don't want debits. They've got to watch what goes on here, and that's the norm. How do I know that? I owned both a stock firm and a commodity firm at the same time, still own my commodity division, and I speak from firsthand experience. I've been through a number of the crashes. I know how this works, and just giving you years of experience, so take it for what it's worth. Now, as we go to the chart action of the day, we thought yesterday, at least I thought, maybe that's the right grammar, that the market was in position to fill this gap. That's just what I told you. I didn't expect another gap lower. Why did it gap lower? The break was already occurring in the futures markets. Remember how these markets work. The markets work in these stocks typically. I realize there's a pre-market, you can trade them on third parties and so on, but when you're looking at the NASDAQ, the New York Stock Exchange and the other exchanges, when you're trading them, it's from the time they open, and that's what this chart is going to be. By the time we opened at 8:30, you'd already had a full-fledged crash going on. You can see the sharp move lower, and away the market went. You don't see those gaps on the futures charts. They trade 23 hours a day, and you typically don't get them. That's the advantage also. If you get my morning future subscriber video, I'm covering all the currencies, the stock indices, the metal markets, and interest rates for you that relate to a number of these different markets, certainly not individually paid. So now we have another gap left here. Is that an island? Remember that word I'm giving you. The word is called, is it an island? An island, you don't fill gaps at the tops. You just gap away. If you fill that leg, it's no longer an island. An island is bearish. That's a bearish formation. So we will see what the pros can do with that. When you look at the swing line, coming into today, forget today's action. Just want to show you. You had the lower highs, the lower lows. You were already in a downtrend. If we take a look at the moving, whoops, I didn't mean to do that. That's my mistake. If we take a look at the moving averages, where were you last night? You were in a downtrend. You had the lower highs, lower lows, the bias was down, and we had said, well, where could the market be headed? And we were talking the lower Bollinger Band. Did I know that? Here's how you looked. It was a possibility. I wasn't expecting it. I thought you were going to try to fill the gap. Didn't know if it would get that low. What is the rule if you hit a lower Bollinger Band? First time you hit it, what do I teach? I don't care what other people teach. If you hit it, that's where I think the pros are going to take a chunk of their money out of the market. They'll jam their stop way down. Maybe today's high is where that jam number is, but they're now on the market's money and they've had a heck of a day, right? When you look at momentum, you're oversold. So we have a market that's got an island. We have the market falling to the lower Bollinger Band in an oversold condition. I'm not giving you the weekly charts. We'll do that over the weekend. In the SMH, as much as we have a chip shortage going on, and there is a big one, if we take a look at the market prior to today, the word is prior, you actually had, if I took this away from even there, you had higher lows, higher highs, and embedded reading on Monday. Let's go to Tuesday's action. You lost the embedded reading, and under 79. I think the pro money was out of the market. That's what I teach, and I will be putting, as you know, my mini course together on this for you. It'll be ready to shortly. I promise you, I'm laying it all out, and once I lay it out, I just go into this studio, I record everything, and the course will be ready. I think the pros were out of the market. Could the market be a bet called a lost embedded slow stochastic trade? The price is going to go to the 18-day average of closes, a stop over the most recent high. In my course, that's one of the things I'll be teaching, and the answer is yes, and that's what the market did. Where the market will go now? Well, again, if it wants to accelerate in the morning, and we're down sharply at this hour, at 7 o'clock at night in the futures, but that's 7 at night. You can have anything by the time you wake up. 216.5 is the target. If it rallies, the resistance 233.15. Industrial sector, first challenge of the lower Bollinger Band. Don't care what it does. Don't care it closed down there. I think the pros took money off the table. What did this look like coming into today? You had a pattern of lower highs, lower lows, looking for the possibility of getting there, resistance, the 18-day average, and a market that was already in oversold territory. And today's the first time you hit it. What about the energy sector? I admit, I have told my traders, and had been for the past 10 days, I don't like how the futures look. They're not looking like this market's going to hold up. And I had no reason to be short. Two parts to it. Bingo. So now everything is finally back in sync on the futures with this market. QQQ, you lost the embedded reading. Did we have one? So both numbers on Tuesday over 80, both on Monday and on Friday. You had your embedded reading. If you lose it, you're looking for the 18-day average of closes. Did you get there? You hit 217.36. You did it all at one time. I'm already neutralized. This leg of the upside is over. Those that got out against the upper Bollinger Band, when you look back at it and you have your stop and you're jamming it up, as I told you, I thought they got stopped out right there when you took that off. And we'll see if that's the case. In the emerging markets, I said I'd change these to black, and I did it on two charts. I didn't catch this here. Lower highs, lower lows. I'm making a mental note as I'm talking to you to make that change. Trend coming in. Let's just go here to Friday. If you look at this high, right here, that high was 75.57. If you come to this high, you were 75.75. So when you look at this, and that's why I run you through those, you already had lower highs, lower lows. You weren't in an uptrend. The bias was up, and then I looked to see, are we embedding? So this is just how my analysis would go. So Friday, both numbers are over 80. Thursday, they're both over 80, not the day before. I'm just in an overbought situation. On Monday, the market just continues with that pattern. So this is Monday's action. Now I've got a lower high, lower low scenario. The pros are probably looking hard at that 18-day average, but you didn't close under it. So they didn't get what I call the all clear signal to be short. Didn't have it yesterday either, and today the market lets go and goes to what number? 73.18 is the low. What's the lower Bollinger Band? Where do I think the pros were coming out? So if you're on the phone with me, if you had written me an email, and I was conversing with you, what do you think I'd have said? GLD, trend is still down. Lower highs, lower lows. Still in the bear phase. Now, the gold miners, and we're back to the black line. So there's 3 charts I have to do, and I'm going to do them right after this. Lower high, lower low, oversold. Maybe you reach down there, but no reason to be long, and too oversold to enter short positions. TLT. Going into the FOMC meeting, I was very consistent to you yesterday. I think as a pro, people back away in futures. This is not stocks. This is not where you're got maximum 50% leverage. This is futures. You have 90% leverage. It's meant to be traded. It's not an investment. That's how I view it. You may not agree with that. That's my view on it. So why go into the FOMC meeting? That would have been what I said and what I lived by. And I've been telling you, as bullish as I am down the road in FXE, and I am bullish. I think this is a market that long-term chart analysis I'm doing calls for much higher prices. Right now, it's not. You got lower highs, you've been under the 18-day average, and you're oversold. Hasn't thrown out any signal I can play with. If we look at the market coming in, you actually had higher highs, higher lows. When you took out today's low, okay, now you got the lower high, lower low in an oversold condition that's knocking on the door of the support. So the key to me, at least my perspective on the markets, being on top of them, taking advantage of chart analysis, understanding the new phenomena that has taken place with social media, with a group of traders that are younger than most people are, that understand their power as to what they're doing, and you adjust to it. I'm a chart analyst. As a chart analyst, I've already made my adjustment. It's the fundamental trader that's got the hard time here because the fundamentals haven't changed on GameStop. The price action has, and you may not like it, but when a market goes up from $20 to $300 and your analysis didn't change, at what point do you say, uncle? And unfortunately, the fundamental guy that does the research hasn't changed his opinion. But if you acted on that, there could be problems. You always have to have risk management. Always have to have risk management. If you'd like to find out more about my videos and how you can subscribe, go to my website, www.iraepstein.com. Under the research, everything's there. I'm Ira. You have a good day.